Hello, welcome to Good Money Moves, the show where we share financial tips and advice to help you feel financially empowered. I'm Jenna Taubel, and with me today is Andrea Allen, our Chief Revenue Officer here at First Alliance Credit Union. And today we are digging into the topic of home equity loans. But before we dive into that, Andrea, why don't you introduce yourself to our listeners and just share a little bit about your role here at the credit union?
Yes. Andrea Allen, as Jenna said, I work with and help support our teams that work in the branches, also our real estate lending team, business lending, consumer lending. So really any of those needs that a member might have when they come in and need an account or financing for anything.
Awesome. Well, thank you so much for being here again.
Yes.
Happy to have you back. Let's just start with the most basic level of home equity loans. What is it? How does it work?
Great question. So a home equity loan is a loan that takes your home as collateral. So think about, oftentimes you might hear it considered a second mortgage. So usually the home or the loan that you get to buy your home would be considered a first mortgage. And that's because it's the first lien position on the mortgage or title for your home. And then a home equity, otherwise sometimes known as a second mortgage, is often a loan that can go behind your first mortgage and help you access more funds out of your home. It's just a good way to leverage that asset with a more affordable loan and larger dollar amounts typically that you can utilize those for.
Sure. So you said a couple of words that I just want to take a step to maybe define a little bit for somebody who maybe isn't as familiar with financial jargon. You said collateral and lien.
Yes.
What do those mean?
Great question. So collateral is the security that a financial institution will often take for a loan. So for example, an auto loan is a loan that you take out maybe to purchase a vehicle, and the credit union takes your vehicle as collateral for that loan. In this case, your home would be the collateral for the loan, and the collateral is considered really kind of that secondary repayment. So in the event that you defaulted on the loan, that collateral could come in to help repay the loan back.
Sure.
Again, that's just in the event that you default, which is not what we're hoping for.
Yeah, so it's like that, something physical that the loan is attached to, essentially.
Yes.
Perfect.
Exactly.
And then you mentioned the word lien.
Yes.
Tell me more about that word.
Of course. So lien just being the position that we're in for that collateral. So it's a lien on your home, same kind of verbiage as collateral. It's just a technical term that usually comes along with that. So we take what's called a lien position on your home, which means we get listed on the title of your home in the event of a default.
Okay, so if somebody had their first mortgage with another financial institution and then they came to us for the home equity, that initial institution would be listed as a first position and we would be second listed.
Exactly
Got
right.
it.
Exactly
Perfect.
right.
That makes a lot of sense. So how is equity in a home equity loan determined? Like, what does that even mean? Great
Question. So equity is determined by the value of your home less what you already owe against it.
Okay.
So let's say simple math, your home is worth $100,000 and you have a first mortgage, for example, of $50,000, you have $50,000 in equity available to lend against.
Okay. So it's the gap between what you owe and what you own on your home, essentially.
Great way to explain it. Yes, exactly
Awesome.
right.
So what does it take to be able to qualify for home equity loan?
Great question. So similar to a lot of our lending processes, it will look at credit and repayment history. We'll look at your debt to income ratio, so how your monthly debt obligations compares to your income that you have coming in. We'll look at the loan to value on your property, which is essentially the same thing as equity. So what do you have for loans as a percentage of the value of your home? We'll look at the value of your home. So we'll pull what we call an automated valuation system. It works kind of similar to a Zillow, if that makes sense, where it knows the market. It will pull in comparable sales in your area, the size of your home, and pull an estimated valuation. So there's some of the things that we'll initially take a look at.
Okay. Side note, Zillow is like my hobby. I love looking at Zillow for no reason at all other than just to see what's out there.
Yeah. I'm always keeping an eye on the real estate market, so I get Zillow alerts like every day. Like, oh, this house is for sale in this area. So it's a really great tool to keep your finger on, just to know what's in the market, where home prices are. Are they trending up? Are they trending down? It might just kind of give you some practicality in what the valuation of your home might look like.
Yeah, no, that's great. That's a great point. Is there any limitation on what you can use the funds for a home equity loan for? Or like what are some of the common things people do use home equity loans for?
Great question. Traditionally, I would say home equity is oftentimes used for home improvements. It's a very common avenue for it. So if you want to remodel a bathroom or add a deck on or pour a driveway, so anything you want to reinvest in your home, it's not exclusive just to that though. You can use it for debt consolidation.
Okay.
For what we've seen over the past couple of years where prices are on the rise a little bit, credit card debt is at an all-time high across our nation, debt consolidations are very common for what we're seeing for now too. I've also, if you're looking at, and we'll probably get into the difference between a loan versus the line of credit, a home equity line of credit, I oftentimes tell people it's just a great tool to have for just in case.
Yeah.
So if you have equity in your home, it's a really minimal cost for some of the mortgage recordings to take out a home equity. And if you have a line of credit, it's just there waiting for you. We don't charge an annual fee in the event that something comes up, or it's a vacation, or an appliance goes out, or something like that. You just have access without having to go through the loan process when you need it.
Sure. So you mentioned, so we've talked home equity loan, and now you mentioned home equity line of credit. So let's just talk a little bit about what the difference between those two are, and that there really are two options if you're considering using home equity.
Exactly right. So the home equity loan is a fixed term loan, and that means that your term is preset. Your rate is fixed so that we have the same rate for the whole term of the loan, and your payment is preset. So when you take out a home equity loan, let's say for example you take it out for $25,000, when the loan closes you'll get $25,000, and then you'll start repaying a monthly payment based on a set term and a fixed rate over the duration of that loan.
Similar to a car loan.
Exactly right.
Yeah.
So we call that closed-end financing, that you can't reuse the funds, you're given it up front and then you repay it back. A home equity line of credit is a revolving trade line. So our lines of credit are good for 10 years, which means essentially, let's say you took out a $50,000 line of credit. If you don't borrow anything on it, then you don't pay a monthly payment on it. And then if you borrow funds, and then you pay them back, that you can keep using that line of credit as you pay it down.
Sure, so just like a credit card, basically.
Exactly right. I often tell members that a term loan or the home equity fixed term loan can be really good if you know exactly what you want to use the money for, and you know exactly the purpose and what you're going to need. That way you know you're locking it in the rate, you don't have to worry about anything variable, you know what payment to expect, and you're just financing exactly what you need. A line of credit can be good for, I'm not sure if I'm going to need this whole amount, or you know, we're going to remodel our kitchen and we think it's going to cost this much money, but we always know there's surprises and things change. So it gives you that wiggle room to just have some flexibility in that amount, or you just want to take it out for a rainy day and it's there for you when you need it.
Yeah, no, that makes a ton of sense. And one, as we've been kind of talking about this, one of the things I'm wondering too is, you know, we talked about using home equity for home improvements, for debt consolidation, and then we kind of talked too about maybe comparing that to credit card usage in some ways. So is it more advantageous at times to use something like a home equity loan, or excuse me, home equity line of credit over a credit card, or even a personal loan when we're talking debt consolidation? Like, pros and cons there?
Great question. Absolutely. I sometimes hear people be a little bit hesitant to take their home as collateral for a loan on a home equity. And what I usually say is debt is debt is debt.
Yeah.
If you owe funds, you might as well structure the repayment of those funds in a way that is going to be most cost effective to you and provide the most flexibility when you're repaying it. So a home equity line of credit is going to offer a much lower interest rate than a 25% credit card, which is right now, if you have one at 25%, it's not ours because ours aren't that high of rates.
Yeah.
But you're also probably pretty lucky right now because credit card rates can get up in the 30%.
Yeah.
It can be really surprising. So hands down, a home equity is much more a much lower interest rate, so you're going to pay less over time.
Sure.
So I just say use the asset that you have to get the more favorable pricing that you could have.
Yeah, no, that makes a ton of sense. I mean, even just from that standpoint, if you're looking at the interest rate alone, that those home equities, because they're secured with that collateral, your home, that just automatically comes typically with that lower interest rate. So
Exactly.
That's a great point. Are there, I mean, you kind of started to allude to this and talking about how people get a little bit hesitant to tie their debt to their home. Let's talk about the risks of using your home equity to fund whatever project you have in mind.
Great question. So the important thing is to always remember when you're buying a home or you're taking out home equity, anytime you're taking out financing, be very realistic with yourself on what the affordability of that payment is. Sometimes we can get caught up in, well, we want to buy this and this. And then remember what that impact might feel like in 30 days when that first payment is due. How's that going to feel? Is it going to be affordable for you? If it's not affordable for you, it's not a good option. So if it is affordable for you, though, that's where this can be a really great tool. With your home being used as collateral, it would mean in the event that you aren't able to pay, and this doesn't happen in a day. It's not like you're a day late on your payment and your home can get repossessed. But if you're looking at being 90 plus days, you're probably going to be getting into some situations where a financial is going to look at saying, hey, we might need to go into a foreclosure process or start taking some of those funds back. So if you default on any loan tied to your home, then your home can be taken as that collateral to repay the loan.
Sure.
So just remember, affordability is really, really important. Whether you're buying a home or taking out home equity, be sure you're realistic that this is going to be affordable in the long run.
No, I think that's great advice. That just comes back to the budgeting basics, right? Like make sure that whatever things that you have planned for yourself fit into your budget in a way that doesn't make you feel stretched. And home equity loans, lines of credit are no different. Which kind of, as you're talking about like defaulting on loans potentially and things like that, that makes me think about credit scores. Is a home equity loan, what does that look like from a credit score standpoint? Is there a certain range that is going to be more likely to be approved? If you have really bad credit, is a home equity loan even going to be an option? Talk a little bit about that.
It's a great question. It's a really great question. Unlike first mortgages that typically go through, some of those government programs and they have set windows of interest or credit scores that are qualified for those, home equities depends on the financial institution that you're working with. You might find some financial institutions, I've worked at some in the past, that essentially they want your credit score to be 680 or above. However, so just be sure you're having that conversation. Obviously at First Alliance, we don't lend based off of a credit score. We lend based off of someone's ability and intent to repay the loan. And we understand that if something happened to your credit, you maybe had a life event that took place. And so we'll just want to understand your story, what happened to get the credit score in that place, and then give you the tools to get your score back up. So while we don't use it for decisioning, increasing your credit score, just be sure that things are going to cost you less when financing in the future. So for First Alliance, we do not have a minimum credit score. Just be sure when you're talking to other financial institutions, you are asking that question because it's going to be set by each individual financial institution.
Yeah, no, that's a really great point. So it sounds like just because you maybe went through a tough life event, whether it was maybe a divorce or medical issues that really kind of put you in a really difficult financial situation, that accessing the equity in your home is potentially still an option depending on your unique situation.
Absolutely. And we do see that people who went through, we had some members that went through a tough time. One of the partners was injured at work and so was on disability throughout the year and fell behind on some payments. And then when your income's low, sometimes you need to rely on maybe a credit card or something to help you pay those monthly bills until you can get back in this position and now back to work. So their credit score suffered this year. It had never suffered before. You could see they paid everything perfectly before they were in that tight position. And so we were able to come in and provide some options for them to help consolidate that debt and just be sure that things were more affordable for them going forward.
Yeah, I bet that was like just a sigh of relief to know that somebody was willing to help them through that and get them back on the right path.
Exactly right. Just knowing that someone will talk to you and not just turn you away when they see a credit score.
Yeah. So what does the application process look like for a home equity loan? Because it can, a first mortgage is a bit of a lengthy process. And when we're talking about it, it's basically a second mortgage. Is that process the same length of time? Is there as much, are you paying closing costs and all of those types of things with a home equity loan or line of credit?
Great question. So there are some closing costs, but nowhere near what you're looking at for a first mortgage. Some standard costs that are recording at the county with the mortgage. There's mortgage registration tax, but again, all minimal fees compared to a first mortgage. In addition to that, the window to close is a lot shorter. Okay. So I would say, depending on your need, we'll collect income documentation. So kind of as soon as you can get us stuff, we can get things turned around much faster than a first mortgage.
Awesome. So yeah, similar process, similar documentation, but not the same length of time.
Yes.
Perfect.
Abbreviated, I would say, yeah.
What happens if I decide that I need to sell my house and I have a home equity loan attached to that? How does that work?
Great question. So when you go to purchase a home, you're often going to go through whoever's purchasing the home from you, and them are going to go through a title company. What that title company does is go and search for anyone who has a lien, like we talked about before, on your home, and then they'll send us a payoff request and say, what's the payoff of this loan? And when you go to sell your home at that closing desk, they're going to take the funds that they need to pay off existing mortgages on your home, and then you would get the remaining proceeds.
Okay. So it's not like a scary process. No. You don't have to worry about that you're going to have this debt you have to bring with you to the next house.
No.
Beautiful. What else should our listeners know when it comes to home equity, as far as like if they're considering this as an option to their financial goals? What are some things that what else should we be thinking about that we haven't already talked about?
Great question. I would just say be aware of what you have as an asset in your home. This is going to be the largest asset that people have typically in your life. Yeah. And so when it contributes to your net worth, just be aware of where that equity is. I'd also say, the sooner that you can pay down debt on your home, the better, but don't be scared of a home equity loan sitting as a lien position on your home, because to your point, it will get paid off if you choose to sell it. Just be sure you're not lending 100%. You can lend 100%, and we will. Just know if you're going to lend up to 100% of the value of your home, you'll want to be sure you're going to be in that home for the long run, or for a longer period of time, so that you're not in a crunch if you do want to sell your home. Sure. So that could just be the danger on borrowing too much on your home. Is just be sure if you're going to take out a 10-year home equity loan, that, at least for the next few years, you do plan to be in that home so you can get it paid down, so you can provide some flexibility when you go to sell your home.
Yeah, no, that makes a ton of sense. And it kind of goes back to that, almost budgeting basics again. Just make sure that when you're moving forward with some kind of loan or home equity or, whatever it may be, that it makes sense for your current position and your long-term position as well. So you're not ending up in a spot where you're feeling stuck.
Exactly.
Yeah. Well, Andrea, thank you so much for being here. We are out of time. This was amazing, and I feel like we could talk about this all day long. There's so much to know when it comes to home equity, mortgages, all of that stuff, and you are a font of knowledge. So thank you for being here.
Thank you.
And thank you for tuning in. Please make sure to like and subscribe and follow us on Apple and Spotify and YouTube if you want to listen to us as a podcast. And this has been Good Money Moves, so thank you for joining us.